Time this evening. This is a scheduled, called and convened Greer City Workshop Council meeting. The subject of the call of the meeting is the audit for fiscal year 2024. Looks like S. Preston Douglas and Associates is joining us tonight to present the results of the audit. And Chris Klein, I assume, is going to do some introductions and get us started this evening. So the floor is yours, sir.
Thank you. Good evening, Mayor, Council. First off, I just wanted to thank our entire organization amongst all departments, not just the finance department. Every department has a key role in making sure that this audit runs smoothly. I always say every single day we're working towards the audit, following policies, procedures. So just wanted to thank our staff for their efforts. I did also want to thank Preston Douglas and Associates for conducting the audit, for being great to communicate with, very easy to work with. Transparency's always been there, so I appreciate it. I would at this time like to invite Lee Grissom up. He's going to be presenting our results for the fiscal 2024 audit.
Welcome, sir.
Drive this once it comes on. Okay. All right, thanks for having me. The good news is this is going to be the information I'm presenting here this afternoon, and I wish it was outside because the weather is absolutely perfect and we needed it. But overall, it was a really good audit for the June 30th, 2024 fiscal year. We issued 3 audit opinions this fiscal year: the traditional financial statement audit opinion on the GAAP-based financials. For that one, we issued an unmodified opinion. That's the highest level of assurance that an independent accounting firm can issue on a set of financials. And basically that one says you can, in our professional opinion, you can rely on these statements as presented. The next audit opinion is referred to as Yellow Book, and that's where we're required to test internal controls. For that one, we're happy to also say that we found no material weaknesses or significant deficiencies. So that's also the highest level of assurance as far as that opinion is concerned. And then the third opinion, federal single audit, that was required this year on the federal grant awards. There were no compliance findings. So all 3 opinions, that's the highest level of assurance. And so let's get into internal controls. So traditionally with Greer, there's been very little turnover in the business office. I knew your previous CFO. We audited Greer maybe 10 years ago and then came back. So this is our 2nd consecutive year. There was turnover this year. That usually can go either way in our experience. I will say this turnover happened basically after this fiscal year. So this audit would be really the previous CFO and assistant. Basically the people that are now gone, that would have been mostly their fiscal year. So a lot of next fiscal year, Chris, your new CFO, our dealings with him were great. He helped get the 114 so page audit report out, or financial statement, did a great job, asked great questions, seemed pretty sharp, but we're not really, can't provide a whole lot, just given the fact that the previous fiscal year was mostly under your previous CFO. There were no budget overages. There was only 3 journal entries and mostly the staff helped us with that. So the books were in good order when we finally started the audit. Just to point out too, Greer has, I think, approximately maybe 35 funds. So it's a lot to account for, a lot for Chris to step into and as a new CFO. Overall, I thought he had a great handle of it. And we did get the audit out 1 month earlier this year. We issued it December 30th, 2024, right before the end of the year. Previous fiscal year, it was January 31st. So, that signals that the books are in good shape and can be audited in a timely manner. And another really positive, for the 25th consecutive year, my notes say, the city received the Certificate of Achievement in Excellence in Financial Reporting from the GFOA. That's a big accomplishment, high level of high standard of reporting. They go through that. The GFOA goes through that report and comments every single year. Really with a fine-tooth comb through the entire report, making sure it applies with the standards. So that's really positive. Financial statement trends, I'm sure most of you at the board are aware of it. We're very positive, really have been positive for the last 10 fiscal years. We'll look at the graphs in a moment. I'll just hit a couple of highlights. Total net position, 101 million, June 30th, 2024. That's an increase of 5.25 million. General fund added 2 million. Previous fiscal year added 800,000. So the general fund's been strong. Governmental funds totaled $90 million, an increase of 32 million. There was a significant amount of debt added for the Greer fund this year at 42 million. That was a pretty significant item for this fiscal year. And Go Greer, legally separate entity, that's a blended component unit for the city. ARPA funds, another significant thing, $11 million were spent of the ARPA funds this year. And I think there's maybe $5 million sitting on the balance sheet at June 30th, 24 for the ARPA funds. So that was a pretty significant transaction. Total capital assets at June 30th, 24 were $110 million. That's an 18% increase from the previous fiscal year. And a lot of that's the ARPA funds that were added, around $11 million in construction projects. A couple of housekeeping items. There were no new accounting policies adopted this year. We had no disagreements with management, and we did not consult with other auditors. Another thing to point out before we get to the graphs, governmental financial statements have become fairly complex in the last decade. There's pension liabilities that equal $30 million that some people think are kind of ridiculous and add more and more complexity and confusion if you look at the statements. So what that's basically saying is there's a lot of estimates out there. So if you see, $100 million in assets or net position, just know that that's not the same as $100 million in cash, for example, which is really easy to verify. So there's a lot of estimates in these statements. But the main thing we're looking for is, did management, with their knowledge and experience, consistently apply GAAP accounting from year to year? And that's what we evaluate. Another notable estimate would be depreciation expense, for example. That was at $7 million. There's some estimate in how you depreciate your assets. So yeah, we're just required to point that out each fiscal year. Is there any questions before we get to the graphs?
Council? Move to the graphs, please.
All right. So are you driving this or me? Okay, I'm driving this. Okay. Okay, I got you. All right, this is first one, analysis of fund balance, governmental funds. And this is kind of like the equity of your governmental funds. And as you can see, this goes from the last 10 fiscal years, 2015 to 2024. You can see a significant increase of 32 million in this fiscal year. And that consists of, as I mentioned before, the general fund added 2 million. And also the corporation, the Greer fund added $40 million. So that $42 million of additional debt this year is basically sitting in cash at June 30th, 2024. So a lot of that makes up that significant increase. And ARPA fund decreased by $10 million, and that's also included in that number. So if you can't read that, that's at June 30th, 24, that's at $90 million of total fund balance. Okay, the next one is fund balance for the general fund. And you guys are familiar with this, the general fund, the main operating fund. So that's really really important, the health of the general fund for the city or any municipality. And as I mentioned already twice, added $2 million. So you're at $24.8 million in 2024. And you could see, from the last 10 fiscal years, almost a pretty steep angle and increase each year. If you go all the way back to 2015, the city was at 8.5 million. So that's a 4X over the last 10 fiscal years. So very strong increase. Another general fund metric, this is number of months in reserve for the general fund. And this is kind of the emergency fund for the general fund. It's unassigned fund balance divided by general fund expenditures for the fiscal year. And for 2024, you were at just under 6 months in reserve. And I would say as the city continues to grow, it's more difficult to keep that percentage high because your expenditures are getting higher in your denominator. So really small municipalities want higher numbers because the cost of everything is so expensive for a smaller municipality. So as Greer keeps, getting larger, it's going to be more difficult to keep that percentage. With that being said, I'd say 6 months is pretty strong, adequate percentage. And the previous fiscal year was, the last 2 fiscal years were around 8 to 7 months in reserve, just to give you some context. Okay, this next one is cash, governmental activities. Significant increase in cash this year, again, because of the Corporation for Greer Fund, which was at $40.1 million at June 30th, 24. So it's a little bit of an outlier here. If you were to take that out, you can still see from 2015 to 2022, 23, pretty significant increase in cash, similar to the other trends that we're seeing at the city of Greer. Next one, outstanding debt, and similar to the other graphs, a big spike in this fiscal year due to that $42 million of debt that was issued during the fiscal year. So in 2024, the debt's at just under $76 million. This next one is current ratio for your governmental activities. This is basically your current assets divided by current liabilities is a liquidity ratio. This was a little bit of an outlier, so I did an alternative calculation. So you see in 2024, because you had that large cash amount in the Fort Greer Fund, it's showing 11.6, which is significantly higher than the previous fiscal years. When you adjust it out for the Fort Greer cash and also the ARPA cash, you're sitting at 5.8. So that's basically your current assets divided by current liabilities. So you can divide your current assets into the current liabilities and current assets almost at a 6-to-1 ratio, which that's pretty strong. This next one is net pension liabilities, and I touched on this a minute ago. That net pension liability is all the way to $30.7 million. This is an actuarially determined liability. This is your retirement benefits, state retirement and health benefits, and a lot of this is out of the control of the city, but you can just see how that liability has increased over several fiscal years, over the last 10 fiscal years. This next one is net position, full accrual basis. Very positive trend for the city of Greer. So this is basically, this includes all the long-term debt, all the capital assets on the balance sheet, kind of like proprietary business accounting here, full accrual accounting. June 30th, 2024, you're at $101 million net position. And that's an increase of $5.3 million from the previous fiscal year. This next graph, property tax collection. Also, you can see very positive trend going back from 2015 to 2024. In 2015, it was at 9.6 million, and fast forward to 2024, we're at 23.57 million. That's an increase of 2.2 million from the previous fiscal year. I gotta get a mouse next time. The next one, hospitality taxes revenue. Also a nice trend for the city of Greer. June 30th fiscal year ended June 30th, 2024. 24, you're at 3.6 million, and that's the highest in 10 fiscal years. And very similar, strong financial trend here on business license revenue. That's the highest in the last 10 fiscal years. It's a $550,000 increase from the previous fiscal year. You're at $12.1 million at June 30th, 2024. Okay, that includes the graph. So just to recap, we issued an unmodified opinion. It's the highest level of assurance that an independent accounting firm can issue. There were no internal control findings, no compliance issues. And again, the controls, we didn't see it drop off due to the turnover. There's no budget overages, no issues. And Chris the staff did a tremendous job getting the audit out a month quicker than the previous fiscal year. Is there any questions?
Mr. Klein, would you join Mr. Grissom there or come to the podium, please? I just, a quick follow-up. Obviously, it was explained that your hiring was after the fiscal year there, and mentioned about number of entities that we had, 22, 23, something like that, in terms of where we've gotten to. Sometimes I know that's project creep, and sometimes that's pretty legit, and sometimes we don't have an idea what's in some of them sometimes. So having now gotten 6-8 months under your belt, where are we in terms of either simplifying that, verifying that, working on that, or it just hadn't floated to the top yet?
And absolutely, thank you, Mayor. And I'm sorry, what was the specific question? You
About the
mentioned
number of
funds that we have?
funds that we have.
Funds, yeah.
Sure, yeah, so we, as far as, we have them, all accounted for. Of course, general funds gonna be the one that you see day in and day out, but we're keeping constant track of everything. The accounting's still up to date on everything, day in and day out. We're running checks through it. Cash is flowing in, cash is flowing out. So we're as up to date as we were as of June 30th. We just continue along with that. Nothing's stopped or slowed down. Nothing's been added or, deleted.
I guess my question ultimately then is, are the number of accounts that we've got now legitimate for what's flowing through them and that sort of thing? Or do you foresee that there may be something that you're going to be combining at some point in time, that we're going to be eliminating at some point in time, or we're going to be adding to at some point in time?
Sure, there's always opportunities to add new funds when they do come up. Nothing in the foreseeable future that immediately comes to mind. Nothing to where I feel like we would consolidate either. We do have a lot of funds, absolutely, but they are all, important in their own right. And keeping those separated is the best course of action at this time. So I wouldn't be planning to consolidate any. And then, of course, just depending on how things go, we can always add a new fund. It pretty much. It could happen at any point. So it's just making sure we're staying in the loop with those things as far as, staying up to date, making sure if anything's coming down pipeline that we know about those so that we can start accounting for them on our end.
Others? I know there was mention of, in a couple of the reports and in the funds, the 2024 bonds and what appears to have skewed a little bit in terms of some of our graphics there. And either one of y'all feel free to jump in, or the administrator, either one. It appears given the strength of this report and some other indicators, which we knew we were on the right track, that this is bearing out to be something that's really going to be good for the city and one that we can handle with ease. Is that your assumption at this point?
Absolutely. Yeah, that 40 million was a large outlier, but even taking that out of the equation, we're still in a good standing, and we have been and we will continue to be. So absolutely agree with that.
Others?
No, I think it was a really good report, especially us being 5 years removed from COVID. You know, in 2018, 2019, we saw some really, really good numbers, and just seeing these trends going in the right direction makes me feel good about how we're utilizing these dollars and spending down funds where we can, you know, do some projects, but also not hurt the city as from a financial standpoint. So, thank you.
Absolutely. Couldn't agree more.
Mr. Bettis?
It looks lovely. Looks like we could lower taxes now.
Gonna put that on the agenda? I'll second that.
Mr. Grisham and Mr. Klein, we appreciate your work on this document and the information. And I'm sure when everybody's had a chance to sit down and look at it in a more comprehensive evaluation, if there are questions, we will forward them to Mr. Klein or to the administrator.
Absolutely.
I do have one comment.
Yes, sir.
These figures are almost too old to work off of now. I mean, they're, what, 8 months old now? So I guess my question is, why does it take us so long to get a end-of-the-year report?
So I'll quickly chime in if you want to as well, sir. So the audit is due December 31st, so we do have up until that time. We can absolutely work on trying to get it scheduled a little sooner once it's completed. But there is a lot of work that goes into the audit. Again, the entire packet being, you know, over 130 pages, so a lot of preparations involved. I will also say too, and when I got here in September, we kind of had pushed that field work back a tad, so there was a delay there. There's always going to be at least a 6-month gap, unfortunately, just due to the nature of when the deadline is and when the fiscal year closes. But we can absolutely work on trying to get it a little sooner. But I do agree and understand what you're getting at.
The federal government does not allow corporations that leisure. You can get an extension,
Yeah,
but they
sure.
expect you to have that paid in 2.5 months.
Right,
I
absolutely.
would say a lot of it, just keep adding more and more pages to it, and it's more work on everybody. Some of it, you say, why does this exist, and it didn't 15 years ago. But
Yeah. You would think with computerization the way it is, that you'd have that thing July 31st, you know?
yeah, I understand.
Others? Gentlemen, again, we thank you for your time and
Thank you.
the
all.
report.
Thank you.
This concludes the workshop. We will reconvene here for our regular meeting shortly.